Hello everyone, good morning to all. Today we are going to start a new topic and the topic is financial institutions. So here we are going to discuss only three parts relating to financial institutions: meaning and concept, characteristics, role and functions of financial institutions. So first we are going to discuss what do you mean by financial institutions. Financial institutions are referred to as a company that deals in all types of finance related business. So one institutions where financial related business activities are done, that is called as a financial institutions. They are different from banks and play a very important part in broadening the financial service in the country. They provide a very attractive rate of returns to the customers in comparison to any government centric banks. Financial institutions encompass a broad range of business operations within the financial services sectors, include bank, trust companies, insurance companies, brokerage firm and investment dealers. So basically financial institution means one organization or entity where finance related activities are conducted. So a bank is also called as a financial institutions. Apart from that, different financial service sector or organization, those are providing financial services, maybe one insurance company, maybe trust companies or investment banking or any other where finance related services are provided to the investors, that is financial institutions. So basically financial institutions provide wide range of service activities and also protect the investors to keep their money in safe deposits and provide attractive rate of interest to the investors, and those are having need of money, also financial institutions provide money in the form of a loan and taking at a certain rate of interest. So basically the role of a financial institution in today's scenario is very important and also it takes into consideration for the economic development of the country. Financial institutions work like banks in some ways. They give loan and advances to the customer and also set a platform to the customer to do some investment. So basically financial institution like bank where we deposit money and also withdraw money, financial institution also like that, and also apart from deposit and withdraw, financial institution provide additional services to the investor. The customer get exciting offers and returns from them and therefore these institutions are gaining popularity. It also provides consultancy services to the clients on their investment related to the financial market where huge amount of risk is also involved. Moreover, the customers who are handling over their hard earned monies to such institutions should check for the history and origin of this financial institution. So basically financial institutions provide customers with exciting offers as well as attractive rate of return. Apart from that, financial institution also provide various types of consultancy services to the investors, and also in the financial market financial institution plays an important role to keep the money from the investor and deposit their money in financial market, and also provide information regarding the amount of risk involved and the return from the investment. The risk return relationship also provided by the financial institutions to the investors. So in today's scenario that provides more popularity and a huge amount of risk also where it is involved, financial institution regarding that provides information to the investors, and moreover the customers who are earning their hard earned money, before investing the money in the financial institution, they also take the information regarding their history, regarding their rating, regarding their popularity, everything, because they earn their hard earned money and they are going to invest in the financial institution. So before investing they must have to collect the all type of information regarding the history as well as the origin of the financial institutions. So the next part we are going to discuss regarding the basic feature or characteristics of a financial institutions. The first one is transferring of funds from potential saver to potential borrower and vice versa. So that means those are having surplus money, the investors those are having surplus money, financial institution take the money from the savers, they are called as the saver, the surplus money of the investor known as the saver. So financial institution take money from the savers and provide money to those having need of money, they are called as the borrower, as well as those are having deficit money, provide money from those are having surplus money. Second point, it provides a high rate of return to the customer who have invested in the financial institution. So financial institution also provide assurance that your money, the investor money is in safe deposit, and also it provides attractive rate of return, because financial institution take the money from the investor and invest the money in the area where attractive rate or huge amount of return is generated. So investors are sure and protected about their money, and also they get attractive rate of interest or rate of return by their investment. Third point, it reduces the total cost of the borrower to obtain loan by reducing time and physical effort. So basically this point explains those are having need of money or having deficit, they are called as the borrower. So financial institution also help the borrower that don't go to outside, take the information from us, take the money from us, invest the money in your area so that you can be benefited, we are also benefited. So without wasting of time, without wasting the physical effort of the borrower, financial institution provide that type of assistance and reduces the hazards regarding the time as well as the physical efforts. Next point, it is considered very important for the development of financial services in the country. So basically financial institution plays a very important role in today's scenario. So for the economic development of the country, financial institution is very important. It provides wide range of service activities. It provides all type of assistance to the investors as well as to the borrowers. So for the economic development of the country, financial institution is very, very important. It also advises the customer on how to deal with the equity and other securities bought and sold in the market. So apart from depositing or investing as well as withdrawing the money, financial institution also provide additional services, like those services are provided in the financial market, buying and selling of shares and securities. So financial institution also provide assistance to the investor that if you will invest the money in this area, then you will get higher rate of return with this much amount of risk. So investors money also invested in different equity market or debt market, and also provide return as well as their investment to the investor within a certain period of time or after the period is over. The last characteristics, it helps to improvise decision making because it follows a systematic approach to calculate all the risks and rewards. So the risk return relationship also provided, or relating to that all type of information also provided by the financial institution to the investor. If investor will invest their money in a particular area, so how much amount of risk is involved in that particular area and what is the return benefit from that particular area, financial institution provide all type of information to the investor regarding their investment. So the next part is the role of financial institution. What are the role that are performed by the financial institution in today's scenario? The first role, the financial institution provides varied kind of financial services to the customer. All type of financial services, investment banking, merchant banking, credit facilities, in deposit, withdraw of money, all type of loan facilities, the risk return relationship. So wide range of services, the loan syndication, everything relating to that information is also provided by the financial institution. So this role is very important. Next role, the financial institution provides an attractive rate of return to the customer. It provides assurance to the customer that if you will deposit your money, you will also get this much rate of return, and generally investment is made in a profitable area where higher rate of return is generated and the investors will be benefited. So role of financial institution is provide attractive rate of return or provide attractive rate of interest by investing the money in profitable or ventures, so that investor will be benefited. Next, it promotes the direct investment by the customer and making them understand the risks associated with that as well. So, this point explains that taking the money from the investor. So, investor having no duty, investor is relaxed after providing the money to the financial institution, and the financial institution take the money from the investor and says that your money will be invested in this profitable venture. So, after certain year your money will be multiplied with this much with certain rate of return, and this rate of return is this, and the amount of risk involved with that investment as well as the return generated from that investment. So, how much risk and return, the risk return relationship relating to that is also provided by the financial institution to the investor. So, investor is relaxed and depositing that money or providing the money is relaxed from all type of a burden. Then it helps in forming the liquidity of the stock in case of an emergency in the financial market. So, when investor is in urgent need of money, he thinks that my money is needed for this purpose and this is very urgent. In that case, financial institution also provide that type of a facility which is called as a liquidity. When there is need of money, then the investor also take the money by providing certain charges, and their money will be provided by the financial institution by withdrawing that money from particular area, and that money will be hand over to the investor when there is emergency or the investor is in need of money, that can facilitate that liquidity facility. Then the next part is the functions of a financial institution. There are various functions. The first function is the financial institution provide loan and advances to the customer. Already we have discussed that this is the basic part of the financial institution. It provides loans as well as it provides advances to the customer, also taking the money by way of deposit from the investors. The rate of return is very high in case of investment made in this type of institution. So, generally when investors invest their money, a financial institution provides assurance that your money is invested in these profitable areas, so that you will get certain additional or more rate of return. So, generally investment or the rate of return is at a higher compared to other kind of investment, and that facility is also provided by the financial institution. Generally, financial institution manages risks and uncertainty for companies as well as families. So, the risks and the uncertainty, for example, one financial institution, insurance company, generally the policy holders invest their money in insurance by way of making a policy. So, if there will be any problem or uncertainty will arise, any accident or any mishappening will be made, then insurance company will provide that type of facility, that means providing a huge or a lump sum funds to their nominee or to their family members. So, the risks and uncertainty, that type of result or information also provided by the financial institution to the families, to the individual as well as to the company. It also provides ways to transfer economic resources through time and across distances. So, financial institution also provide assistance, also provides various types of facilities to the investor. If investor having surplus money or having economic resources, their resource how that will be utilized in a different area, not only in India but also in outside market, foreign markets, so that investor will get more rate of return, and also our economy also developed. So, that type of information also provided by the financial institution, or that is also one of the important function by the financial institution. So, that investors economic resources will be utilized in a different area across different countries. It can also make an effort to minimize the monitoring cost of the company. So, all type of cost, transaction cost, that should be minimized by the financial institution, because financial institution at a glance provide all type of information, provide all type of facilities regarding investment, regarding market, regarding companies, all what the company is, what is its rating, what its condition in market scenario, everything should be provided, so that investor will get all type of information. They will analyze that if my investment will be made in this area, so this is the risk and this is the return or the benefit, so that they will be sure and invest their money. all the finance related work is done by the financial institution or on behalf of the customer. So, generally financial institution provide all type of financial services on behalf of the customer by taking the money and providing attractive rate of return. So, on behalf of the customer, financial institution provide this service or these functions. Thank you all.